G'day guys, Seeney here and welcome to another episode on the Australian Wealth channel. And in this episode, we're talking about 3 stocks that I'm watching right now. So thank you guys so much for watching. Please make sure you like and subscribe to the channel. It really helps to get these videos out to more people. So in this video, I'm talking about 3 stocks that I'm actually watching at the moment. These are stocks that I don't currently hold any position in at all, but you know, they've kind of caught my eye for a number of different reasons, and they definitely require a little bit further research. So in this video, I wanted to talk about those 3 stocks. They're all in completely different spaces of the tech industry. So without further ado, we're going to get started on that. So the first stock that I'm looking at is Affirm. Now, Affirm is very much a buy now, pay later play. There's a number of different companies like this around the world. An example in Australia would be Afterpay. There's also ZipPay, which is another one, and Affirm is another one in this particular space. Now, Affirm has just partnered with Amazon, and they're going to be doing a lot of work with them. So the reason that these buy now, pay later services are so popular is because it really taps into human psychology. It's basically a credit card, but for the modern era. So many people, you know, they want the latest and greatest thing right now, and they're happy to pay for it later because it's just so easy. You know, it's not something that I've actually grown up with too much. You know, I come from that kind of background where, you know, if you want something, you'll go earn the money, you'll work for it, and then you'll pay for it completely in cash. When it comes to investments, such as housing, you know, I think that's a different thing because you can actually use debt to make you money. But, you know, I come from that school of thinking, if you want to buy something, then, you know, you need to pay for it up front. You know, you shouldn't be slapping all that on a credit card. But, you know, it's easy to make money out of people that think a lot like that. So Affirm is one of those companies that help to facilitate that thing. So people can actually buy stuff now and get it later. Now, this, if we look at the stock price of this particular company, it's growing drastically. So I think it certainly warrants a little bit of a looking into to see how much room this company can actually grow. What is the total addressable market for this space, and what is the piece that Affirm will actually have? Now, the thing is, in this space, it's a very low barrier to entry. So all you have to rely on is brand name. And that's the reason that, say, Afterpay has done so incredibly well, is because they've relied on that brand name. So that is a little bit of a risk. It's such a low barrier to entry. It's not like a cruise ship company where, you know, you can just start your own Royal Caribbean tomorrow, you know. But, you know, if you have some good coding and some knowledge and, you know, take a bit of time to build up that product, then it's really easy to enter that space. So that is one of the risk factors that we'll probably need to take into account before we do any investing there. But that's certainly one that I'm going to be looking at. Okay, now the next stock that I'm looking to invest into is Facebook. Now, I've been a Facebook shareholder in the past. I actually sold out of it around 220 because I feel that the value just got way too overstretched, and then took that money and went in and invested in some different companies. But having said that, Facebook has actually been beaten down quite significantly since that time. You know, the stock is higher than when I sold it, but it's still been beaten down quite significantly from its all-time highs. Now, Facebook is no stranger to scandal. When it comes to scandals coming out in the media loves to jump on this when it comes to Facebook because they're competing for the same dollar, really. The media is always trying to get their money through advertising, and that's how Facebook is also trying to make their money. So anytime there's like the tiniest little scandal or something like that, Facebook is just getting put absolutely through the ringer by the mainstream media. So this is something to keep into account, that sometimes you'll see a lot of bad news come out about companies, but you have to think, what is the ulterior motive for these companies? Why are they doing that? Whether it's these companies have decided to go woke to look popular and trendy in the modern pantheon of this world, or whether it's attacking a social media giant because they're taking too much of their advertising money, there's usually an ulterior motive. So if we can look past this, we might actually find some good opportunities to buy stocks. And Facebook is one of those ones that I think actually could be a good opportunity at the moment. It's trading around $320 a share, which has been beaten down quite significantly from where it has been in the last last few months. Now, the reason that Facebook is so attractive is because the balance sheet is fantastic. The management team continues to execute at an insanely high level. They're an absolute profit beast, and they're moving into all of these industries of the future. So you might have seen a little bit about what's called the metaverse. Now, at the moment, we are in what's called Web 2. The first iteration of the internet was you could go on and you could look at things on the internet. The second iteration, which is what we are currently in now, is basically the social media generation. We can look at content and we can comment back. Now, Web 3 is going to be an entirely new rethink of what the internet is, and it's an area that Facebook is doing a lot of development in, where the internet has become a lot more decentralized, and they are actually at the forefront of that, which I think is a really smart move for the company, because it allows them to stay relevant going forward when there's a lot more decentralization going on. So Facebook, for that reason, I need to do a little bit more research into the valuation and the total addressable market for all of these things, but for that reason, I'm looking at Facebook too. And the third stock that I'm looking into right now is in fact Palantir. Now, some of you guys might have heard about Palantir. It's a little bit of a smaller company. We're not talking hundreds of billions of dollars yet, but it's a company that could certainly grow into that size purely because of the space that they're in. Palantir basically connects artificial intelligence and data. It's the intersection of those two things. And those two areas are incredibly powerful, especially when you put them together. So Palantir has been working closely with the US government and trying to find any inefficiencies in their data. It's certainly a space that I need to do a lot more research in how to understand this, but I feel that there's a lot of potential going forward. I have some friends that work in data analytics, they're data scientists, and these people are paid a lot of money to try and find any inefficiencies that might exist, any way to make things better. And when you can combine that with a computer finding inefficiencies, there is some serious potential for exponential growth there from this company. Maybe one day it's a company that is used by pretty much every single company in the world that has anything to do with data at all. And going forward, that's certainly going to be the way it is as we move more into a digital space over time. All of this data and collecting that data, it's going to get infinitely more complex, and the only way moving forward to be able to sift through it all and understand it is going to be with AI, because it's just the job is going to be too big. So we need a company that has those tools that exist, and Palantir is certainly one of those companies. So for me, it's a little bit too early to be investing in this because I need to understand the business better. It's been knocked down a little bit from its all-time highs, and at the moment it's about a mid-cap stock, I believe. So there is potential for growth into a much bigger space. But I think when you're investing, it's really important to completely wrap your head around the company and know exactly how they make their money, how they do it, what the total addressable market is, how they're going to get a massive chunk of that total addressable market, and how they're going to execute that vision, basically. So I hope you found this video really interesting. Please make sure you like and subscribe to the channel. It really helps to get these videos out to more people. I'd love to hear some of the stocks that you guys are looking into. There's certainly some deals out there that I'm pretty interested in at the moment. I've picked up a couple of new stocks recently as the deals have arisen. So if you want to get yourself a free stock, I have a link to Stake. So if you sign up with the brokerage and deposit some money into your brokerage account, then you'll get yourself free stock. Could be GoPro, could be Dropbox, or it could be Nike. Who knows? And if you'd like to track your net worth, I also have a link to WeMoney. It's the best place, I personally believe, to track your net worth. It connects to all your accounts, it's incredibly safe, and they'll give you $5 just for signing up, which is fantastic. So thank you guys so much for watching. Please make sure you like and subscribe to the channel. My name is Seeney, and we'll see you later.